Hello and welcome to another update video about XDC. Yeah, the XDC chart, we're still tracking an overall bullish scenario here with potentially a third wave to the upside that could start to unfold here at some point. And it is a reasonable expectation as long as the price doesn't break below 3.7 cents, which is the 78.6 retracement level. We had what I consider an A wave to the downside. We hit here this 50% retracement level in August. Now let me take that out. It then broke above a trend line and has been following the pathway higher into resistance. So this was the resistance for a B wave, okay? A, B, C in wave 2 is the expectation. And this could have been the B wave, and we're now coming down in a C wave. However, this, the way I look at this structure now, it has the potential to morph and change. So I can tell you very clearly that this could, the way this looks, this could form into a more extended B wave, yeah? Because it's not following through as it should to the downside in this C wave. Well, it's not invalidating anything. It hasn't broken above any previous high. But if it breaks above the 5.98 cent level, it would break above the wave 2 high. And then this imminent C wave to the downside is probably not what we should be choosing as the best representation. I already don't like the look of the wave 4 anyway here. The only way I can defend that is basically as an ending diagonal that's still unfolding here, but it's not reliable. So I'm starting to think about and starting to prefer that this B wave might get an extension. Yeah, what does that mean? Well, I first of all, I consider that because the B wave didn't touch the 50% retracement level, okay? And the B wave is normally a nice and clear 3-wave move. So what I'm considering is that the move down here, yes, was an A wave. The move up in a B wave is an A, B, C structure in a more extended B wave. And then we get the C wave down eventually. Yeah, just a little bit with a little bit of a delay. The thing is, what I have labeled as B wave is already quite shallow. I mentioned that in previous videos. And if it then doesn't follow through, because honestly, this low should go below the A wave low, which was made here on the 27th of August at around 4.96 cents. But it didn't go below it yet. And because it didn't go below it yet, I have to keep the option open for another retest of the resistance area and another reset of the B wave, especially if I look at the details, yeah, of how this chart moves. And that is not really following through in a C wave as it really should be. It should really, in the C wave, ideally get to 4.4 cents because we want in this C wave the price to get below the A wave. I think that's quite important. Until then, yeah, I mean, nothing, no clear setup here at the moment. I think no signal that the price has really formed a lasting low in the support area. And it's sort of moving between support and resistance. A break above the 8.16 cent level would indicate that a third wave rally is running. Yeah, so you could say as long as we're holding down there 3.7 cents, a third wave rally is generally a reasonable expectation. But it would need to break above 8.16 cents to confirm. And whatever it's doing in between is just a corrective mess, really. Yeah, so it's certainly reasonable to expect another few ups and downs in here. And if it gets back into the resistance, it could just be the B wave, then another retest of support, and then move. But this is not a very clear pattern, yeah? So purely analyzing this because of member requests. So this is best I can say. Better than focusing really on the microstructures is to understand the relevant resistance levels and support levels that I've given you here that are relevant for trend continuation higher. That's my update about XDC. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.